Hello guys and welcome to another post-market analysis of Bank Nifty. Today is November 6th of 2023 and this is the Bank Nifty's chart on a 5-minute time frame. But before we get into the price action of Bank Nifty today, let's as usual start from our daily chart. Okay, so this this is a daily chart of Bank Nifty, and by now, many of you might have got bored because we have been talking about this chart continuously, day in and out, from last many days. But still, for those of you who are visiting our channel for the first time, please do subscribe before you continue watching. And see, this is the support area we were s- talking about earlier, where we have seen an M pattern there that is double top, and then a small swing high there, and then we have seen a proper breakout of this. And we know that the market is clearly in a downtrend, but from the last couple of days, even in the last week, we have seen a couple of gap up openings, but still we don't have any proper signal anywhere near this in this line to get into towards the call side. But our expectancy was, it will come back at least to this area, because it that is, see, if you readjust that, that is, see, today is one such day where it came very close to your support area, which in turn now becomes your resistance area. And if you see from the last 4 days, this is again the fourth day you are seeing a doji setup. A doji means a small line instead of a full candle, real body like this. So this was a perfect example of, these two are perfect example of dojis. Even that was a textbook example of doji. Even today, even though you don't have a proper wick on the top, you see that is a very thin line. That means market have pretty much closed at this almost the same range where it has opened, but it has also a very long shadow compared to your upper shadow. So this can be a hanging man setup. If you don't know what is hanging man setup, I request you to go and visit our candlestick pattern series, where we have been discussing about reversal patterns. So this is one such setup, but we have to wait for a confirmation there, because when you see location wise, it has come in pretty much at an important location. The only thing pending is the confirmation candle after this. So if you are seeing any close tomorrow below this, then we can safely assume that market can continue towards the downside. But as we have discussed in the last week, these two levels have were very important. See, that low and this low, because from this is the place where from markets have started falling pretty much drastically on this particular day. So if you notice, today it has closed above this, but immediately we can't expect prices to go uh, all the way up, because this is a support zone. This now acts as a resistance area. So now in this case, we have to wait for any confirmation or any reversal candlestick pattern that we can see here, so that we can assume that the market is coming down. Or if you see any close beyond this level, then we can think that market can go up at least till 44,788, because that was the swing, that was the previous swing high. Okay, so that's it with this chart on a daily time frame. So let's get back into our 5-minute time frame, and let's dissect the Bank Nifty there and see what the Bank Nifty has done today, and let's see what we can learn from today's price action. So this chart right here is the Bank Nifty in 5-minute time frame. That's 5 minutes in time, in 5-minute time frame. If you see, market has started from this level, 43,636 level, but right from that moment, again to come back to this movement, I mean this level, it has taken a complete entire day. Okay, immediately this is a very big candle. You see a setup of you see a setup like this very often, where you see 133 points of movement in one single candle. That is the first candle. Okay, again, see from here, you can pretty much assume that this level is holding up because market is really not given any close at see around 10:10. Okay, by now you know that market is holding up this level and also this level on top, so you can safely draw based on this swing low and high reactions. You can safely draw an intraday support level and resistance level for this. Now wait for a good a price action that is either breaking down or giving you a positive signal here to go towards the top. What has happened after 10:55 11 o'clock is the market has given a breakout towards the downside. As we always see this, the first thing what to notice when you see a breakout is whether to identify it whether it is a true breakout or false breakout. In this case, it is a true breakout because after breakout, you have to wait for the prices to come back and test this area again and see a bearish signal, or you should see a confirmation candle after this. So in this case, our confirmation candle is a red candle. So that means that this is a proper breakout. So now you don't need like if you are our old viewer, if you have been following us from the last few days, you know that we will not get into a trade until we have at least three confirmations, three reasons to get into the trade. So here, the reason why we couldn't get into the trade is because I'm taking this arrow off. Is because if you notice on the previous day, toward before, see if you are entering here, that means that the market, you are assuming that the market is coming down. So you have to look on the left and calculate where your target could be. So in this case, if you are entering there, your immediate target is only this because this is your previous day's resistance area right there. And in this case, if you have to enter, your risk should be above this, which means you're not getting proper risk to reward ratio here. So if you are entering there, see, for the sake of this much of the target, you have to you have to sacrifice a lot. Your risk versus reward ratio is not even one. So whenever you don't have any proper risk versus reward ratio, in that case, excuse me, in that case we'll stay out of the trade. So in this case, what has happened is it has touched this and then again started coming up and closed beyond this. Now if you notice, after this bearish engulfing pattern, this is a bearish engulfing pattern. Okay, so prices have started to come down from there because this is a bearish engulfing pattern, and this proper green candle couldn't see a proper close after this candle. That means there is no confirmation candle here. That was not a good sign. So here in this case, if you are entering there, your immediate target is this. So your risk versus reward ratio again is not so great, so we couldn't do that. And now when the market is here standing at this stage, what you could do is you could just slightly rearrange your support area. By now you definitely know that something is fishy with the market because your initial candle itself is pretty long, and after that market is not confident enough go in both of these directions. But till now we have only these two support and resistance areas, also with your previous day support area. Now what you'll do is, see here you have a breakout after above this support area, and then an immediate candle also has closed above this area. Even though it is red but it is doji, you can take that as confirmation. But then again, here from here to here is only your, if you are entering there for the call, your risk would have been under this. By now we would have changed this also because even this is your support area. This entire zone becomes your support area. So you, once if your market starts falling down, you don't know where it will stop, so it's safe to move your support area till there this and remodify your support area. So in this case, it has clearly not given us a chance for an entry because of the risk versus reward ratio here. And then finally, if you see here again, there is an engulfing pattern, but your risk is very large, and this is the place where you are seeing a couple of confirmation. This is a breakout and you have a proper breakout. Okay, and also your risk is very less, you are thinking, but you will enter into the closing of this candle, right? So literally, if you want to enter there for the sake of this target, for the sake of this target, um, again, that would have been a foolish trade, because look at your risk versus reward ratio, it is not even one. So to be frank, this has given again at 245. It has closed below this resistance area, and now again it came back and closed above this area. So by now you would have this, because we have this. So our first target from here would have been there. Okay, if let's see if we can check, but you don't have to force yourself into a trade. See, this is your piercing pattern. This is your piercing pattern coming after a small downtrend. So all these patterns were discussed in our candlestick pattern series. I request you to go there and watch it. So even here, see, from there to here, your risk versus reward ratio is not even one. So why do you want to force yourself into a trade when actually there is no chance in a price action? So that's it. You don't have any a good reason to get into this trades, but let's check in another method. Let's check in another method. It's okay if you don't trade for a day. Markets are always there, they'll outlast us, so you don't have to worry on that part. Okay, so this is an indicator called CPR, which is a central pivot range. So whereas this blue lines that you see in between are a central pivot range, which has come based on your previous day's price action. See, these three are a central pivot range for this particular day, which are derived from your previous day price action. So there is we'll discuss about CPR as well in our further videos. Just let us know in the comment section whether you want to learn about CPR or not. So once after we finish everything on a candlestick pattern, then we can come back to this indicator, where it helps you to predict and be. It also help you to maintain your direction. If you are well aware of your CPR indicator and how to use it, you even before I mean, just after starting the market, just after 1 minute of market opening, even at your pre-market stages, you would know that whether have to be towards the call side or a put side. So based on this CPR relation, so in this case, you don't think that this is only one line. CPR will always have three lines in between. The only thing is this is very narrow. This, see, you see three lines there. Okay, so this is very narrow. So according to CPR rules, see, whenever you see a narrow CPR, it means that it is going to be a trending day, and you always have to compare your CPR to your previous day. Here in this case, it is a higher. This is a higher value CPR, which means your CPR value for today is higher than your previous day value, and yesterday's close is above your previous day's CPR, which means that it is bullish. And if today's prices are opening well above this point, then that means that you have to be bullish, and then wait for prices to pull back into any of your all these green lines that you see are resistance lines, and all you red lines that you see down there is support lines for this particular day. So according to CPR, there was one trade, because it has given us, because it is higher value opening and yesterday's close, and today's opening is well within the CPR rules. So here we have seen any pullback, and then if you are seeing any candle formation that is happening at an important location, that can become your that can add reason to your trade. Whereas in this case, here there is no chance. But then here, if you see, this level is very important, because it is, you see an orange line there, you see a green line, and also an orange dotted line there. Orange line is nothing but its previous day's high or low. So this right here is not only an R1. This one is an R1, R2, R3, and we'll have four levels. Please excuse me with the background noise that you are hearing, and um, sorry for that, because there was some construction work going on right next to us, and couldn't stop it. Please ignore that sound. Okay, sorry for the disturbance. Okay, let's continue further. See, this is an important level, because this is not, there are two lines merging at one level. That is your R1 and previous day high. Okay, so if you want, we can also enable that. Let's see if we can Color of the bar, previous stage, high, bar change values, title. Where do you have that? Okay, symbol, will another indicator and financial names. Okay, so like this, you can switch on this and then see if you want to see which line is what. But then we know that this is R1 and a previous day high. So here you have a bullish engulfing pattern coming at this location, and also your CPR rules are saying that you have to take trade towards the call side, towards the upside, and this is a narrow CPR. You have multiple reasons. So then there, if you are entering, your next level is going to be a target, whereas it has well achieved a target of 58 points, but your risk versus reward ratio is below this. So it is almost 1 is to 1. For 58 points, you are losing 50 points. Okay, that was one trade. And here, this is not a proper breakout because of, okay, this can be because that is a doji candle. This can be, but again, it never seen a close beneath this with a strong red candle until this point. So even this would have been there, whereas here again, if you see, this is a bullish engulfing pattern. This is a bullish engulfing pattern. See, it's here in this CPR, your breakout doesn't matter a lot. Your pullback and your candlestick reversal patterns matter a lot. So here, if you're seeing a bullish engulfing pattern after R1, that is at R2, now your target becomes R3, which is well achieved. So even if your previous trade is a couple of points lost there, you would have taken 85 points here. But again, see, you have to know what are your strengths. You don't have to switch on all your indicators and see what can give you a trade, a reason to trade. It's okay, but according to our strategy, according to our swing, low and high resistance areas, intraday resistance areas, and candlestick patterns all put together according to price action, we have not seen any trade, so that is fine. Days do appear like this, where you can be very patient, and I think it is a chance for you to where you can be extremely patient and wait for the next day, or the next opportunity until you see reasons. Okay, so hope you have learned something about this post market analysis today, and let's catch up in another post market analysis. That is for tomorrow. Thank you so much, and please do subscribe for our channel for more such valuable content.